and good afternoon, traders and aspiring traders. So, welcome to another episode of Trade Breakdowns. So, in this trade breakdown, I will be breaking down two trades that I took this week, one on Wednesday and the other swing trade on Thursday evening, PM session, New York PM session. So, both trades were wins. The first trade was on US 500, where I took longs on Wednesday. The trade ended up being a break even after taking take profit one, and then the other trade on Thursday, US, I executed it on US 100. The trade was a win. I took TP1, TP2, and TP3, and the runner, which was targeting above all-time highs, TP4, was stopped out in profit after that sell-off on after the 9:30 Friday open. So let's get into it. So if you're watching this video, I expect that you have already watched the weekly outlook that I had posted on Tuesday morning. I actually did it live on YouTube, the weekly outlook, so it's still there. So if you haven't watched it, I would advise you watch it first before you get into this one, so that you can understand the levels that I will be referring to. So to start with, the first level that I was referring to this week was the NWOG, the new week opening gap, which is marked this fair value gap. This is a reddish brownish color. So yes, that was my NWOG, new week opening gap. So I was expecting it to anchor price to the upside, and I explained all of that in the weekly outlook. So let's get into how I actually traded. So on Tuesday, I did not take any trade, as Tuesday we had this retracement lower which retested the new week opening gap. So as I always say, anytime I want to trade upwards, I want to see some form of sell side liquidity sweep or some form of manipulation lower. So on Tuesday we had that price traded lower, swept Monday's low, and it actually reached into the new week opening gap. It retested the new week opening gap and it respected the consequent encroachment. So I have been mentioning all this throughout the week. So on Tuesday, I never got a trade back to the upside, so I was still patient because we had 3 more trading days in the week: Wednesday, Thursday, and Friday. So on Wednesday, so you can see that price retested and then started leaving that, but we never got any form of assured change in state of delivery. So I waited for Wednesday's price action, where I expected now to catch the longs. So on Wednesday, when I came into the charts during my daily outlook, I mentioned that we were to have FOMC later in the evening. So my aim was to be out of the market by the time the FOMC minutes were due. So I was only trading in the AM session mainly, but I ended up trading up to the FOMC meeting minutes with lesser positions. So the trade was actually taken on US 500 because it was delivering price more efficiently, or in a way that I could catch the moves. So let me just divide this into daily time frames, intraday price action, so that we can look at it. Just a minute. I had marked this prior to starting the video, but I just noticed that I had marked last week's price action. So just give me a minute. Tuesday midnight, we have Wednesday midnight, then we have Thursday midnight. So as I have said, I took the trade on US 500 because it ended up giving me more of re-entry opportunities compared to US 500, which just kept spooling and spooling. So let me narrow down to the 15-minute. So remember price when after price retested these levels on both assets, now I was ready to take part in the long positions. So Wednesday opened here, traded lower, then traded back higher, confirmed that change in state of delivery, but we had not swept any form of sell side liquidity to say so on both assets, but we had formed a higher high on US 500. Okay, correct. So, and then we came to the 9:30 open. So as usual, you know that I always wait for the 9:30 open, where I usually wait for the 9:30 open to get my entries. So we had this change in state of delivery right here, because I always say that before going higher we need to go lower. So we had this uh, down close candles, and then price closed above that, which becomes a change in state of delivery on basically on all the time frames, but let us just use the 15-minute time frame to make this video easier to look at. And then we had this SMT right here, because we have swept that low on by a point on US 100, but we had formed a higher low on US 500, which is the SP 500. So I'll just mark that as my SMT. Then this can be an SMT or a liquidity sweep. Any can do. So let's just use SMT because we formed relative equal lows and a higher low on the other asset. So that is the law of correlated pairs. So as soon as we traded back into that level and closed above it, it became a change in state of delivery. So all I was waiting for. So as soon as we did that, you are allowed to enter the trade, but remember it's the pre-market. This is the London session, and I do not want to be trading the London session because it's quite unpredictable for me. So I was waiting for the 9:30 open. So let me just mark the 9:30 open here. The 9:30 open, which is the New York Securities Exchange, the New York Equities Open. So that is what I was actually waiting for, so that I can enter the longs. I expected, so you can see that we retraced lower into this displacement leg. So this is our displacement leg, and then this is our retracement leg. So from this point to this point, it's a retracement leg because we are retracing back into this displacement leg that formed the change in state of delivery. So what I had marked was that I wanted to see my change in state right here on that level. So I had marked that as my LDC, which is last down close candle. So at that level, at 25909.5 level is where I wanted to see the change in state of delivery form. Okay, let me just make this a full screen. Sorry about that. Yeah, I had not noticed. Okay, so this is where I wanted to see my change in state of delivery form, where then I will be able to enter my longs after some form of maybe retesting that change in state level. So 9:30 open, this is what I have marked with this line, this vertical line right here. So as you can see, 9:30 open came, uh, price pulled higher uh, within the 9:30 to 10 a.m. That is the opening range. The 9:30 within the 9:30 a.m. opening range, we had already pulled higher, and we had already traded over how many handles? Let's see. From our expected level, we had already traded over 100 handles already within just the opening range. So already I I quickly noticed that maybe I have already missed the entry. So what I did is I was now comparing the two assets, US 500 and US 100. So I came to US 100 and noticed that the same price action had occurred. We had that change in state first, then the retracement leg. But then the retracement leg had been traded into again once, and we had another change in state of delivery on US 500, which I had not noticed, but no problem with that. So as soon as price pulled higher and I noticed that I had missed my entry, I waited for this retracement leg, which occurred at 10:45 a.m. And then remember, I always mark my retracement legs, and I will show you. Uh, I use this arc to mark a retracement leg. So that is a retracement leg, and as soon as we leave that retracement leg, that can be a re-entry. So what do I mean by a re-entry? If you missed an entry or if you took an entry, markets or price will always, or in most cases, in most cases, price gives traders opportunities to re-enter a trade. So actually on Wednesday, I did not catch the trade from this low and I took it as a re-entry. So as soon as price retraced lower and then it started to rally higher, I had this change in state of delivery right here, and I took that trade on a 3-minute time frame. Yes, so let me just go to the 3-minute time frame. I will post that. I will post that screenshot here. So yes, this is actually a better view because okay, so this displacement higher occurred during that 9:30 to 10 a.m. opening range. So as soon as I saw price was not willing to come back lower, I started looking for opportunities where I could re-enter the missed entry. So we had this first retracement leg. So I will mark it with another arc. We had this first retracement leg, and price left that retracement, formed a change in state of delivery. So we will mark that as our change in state of delivery, CISD. So that is a 3-minute change in state of delivery. Remember, we already have the directional bias, the higher time frame directional bias. So all we are doing is looking for entries on the lower time frames. If you missed the earlier entry, you can always re-enter with appropriate risk. So we had this first change in state of delivery. I did not enter with that because I was just observing price by then. And then we had another retracement lower, which now confirmed another change in state of delivery here. So we will also mark that as our change in state of delivery. So that is another 3-minute change in state of delivery. So by then I was convinced that price was not willing to come back to these levels, and I actually posted on my analysis that there are two ways that this price action could turn out, and I will just attach that here so that we can see. Say that there are two ways that this could unfold. Price could leave that gap open by the end of the day, thus it becomes an inverted fair value gap, or I could get the retracement leg that I am looking to trade off from. So when I started to notice this price retracing and then leaving that retracement leg, retracing, then leaving that retracement leg. I was convinced that price was not willing to come back this low, and maybe we were just going to leave this as a higher time frame inverted fair value gap, which we will talk about in the next few minutes. So as soon as I had this change in the second change in state of delivery after a second retracement leg, I took that long and placed my stop loss on the retracement leg low. So I took my entries here. I took my entries here. I was targeting the my stop loss was on the retracement leg low, the second retracement leg, remember? And then my targets were based on the all-time highs that we had left on the previous day on Tuesday. So that was the previous day high, this one right here, which was Tuesday. That was my take profit one, 67.57. So I like to round it off to 67.60 because price will always reach a few points. In most cases, price will reach for levels higher than that in most cases. So my first take profit, as mentioned on the chart, was at 67.60, and then my second take profits was at 67.75, and then 6800 was where I wanted to actually take. My final target was at 6800. That is what I was expecting on that day. So that was my thought process on that day. That is what I wanted to see. So I think I should just show you how that was. So let's go to the Telegram group, the Telegram channel. The Telegram channel is free. You can just join. The link is in the description. You can just feel free to join. I post my analysis and signals on these charts. So yeah, this is the same thing that I have done on that breakdown. You can see that I had marked the first retracement right here. Then I had marked this one, the change in state right here. And then as soon as that 3-minute change in state of delivery was confirmed, I took that trade and I wanted to ride that price action higher. So TP1 was reached. Let's look at that. Approaching TP1 real fast. So TP1 was at 1:1, which is 67.61. So TP1, we took TP1 around 40 minutes after entering the trade. You can see. And then I moved my stop loss higher because we had FOMC in the PM session. So I moved it just below the swing low that's bearing a 3-minute displacement gap. If price fully refills it, I'm closing the day. So let's go back to the 3-minute and look at that. The 3-minute chart. Okay, so remember, stop losses are it is the only way to protect your capital because you have no control over how a trade will turn out. The only thing you have control of is how much you stand to lose or to gain in a trade, and how much you stand to lose is the most important thing. So I have mentioned that I moved the stop loss to the swing low that was bearing this 3-minute displacement gap. So as soon as we took TP1, which was at 67 what, 67.61, where was it? So is it this one right here? I think the fact that I am using a different chart is okay. Different brokers have different spreads. So I remember that this is what gave me TP1, this this level right here. So as soon as we hit that, I moved this stop loss from here to this swing low. The swing low that I'm talking about is this one at 67.46, because it is the one that resulted to this displacement to the upside. You can see that we had that swing low and then we displaced up to the upside. So that could also have been another re-entry, but no. So I moved that stop loss there. So you can see that as soon as I move my stop loss, the risk to reward ratio increases exponentially. But however, that was not hit. So let me just mark the displacement gap that I was using. Okay. So this is the displacement gap that I was talking about. So this is what I was observing as we traded throughout the day, and you can see that we consolidated for the better part of the rest of Wednesday, which was okay for me because I had already taken TP1, which was not much, but I had minimized my risk because I have taken TP1 and I have moved my stop loss higher. Okay, so as I was expecting FOMC, my stop loss was right here, and I was okay with holding the trade. I was okay with holding that trade. So during FOMC did not give 30 minutes to the close. I always mention that I like to close my trades before the 4:15 close, depending on when I took the trade and depending on the type of trade, because sometimes it's an intraday trade and sometimes I am willing to hold that trade throughout the day. So on this particular day, I moved that stop loss to break even and I left it to run for the rest of the, let me just show you. Let's go to, so I left that trade to run and I left that trade to run with risk free after I moved that stop loss to break even. So yes, this is the image that I was looking to show you. So you can see that I moved that stop to break even and I left it to run. So the same move was observed on US and 100. It achieved the same handles, but so I left that the running trades to play out, and I was expecting to hunt for more on the next day. So let's now get into how I traded. I took the Thursday trade. So let's get back to trading view. So let me just clear this so that we can cover Thursday's trading. I'm sorry. So you can see that on Wednesday I did not get as much displacement as I wanted from my point of entry. It was only around 10 pips because it was here. So I rode it up to 67, 68, around there. So we got around 15 handles with my team. It was not much. So just clear this. Then now let's get into the main trade, my main trade of the week, where I got over 160 handles in total. The trade ran from Thursday PM session to Friday AM session. So as I have mentioned, I am comfortable with holding some trades if they are promising and if it offers a good risk to reward ratio. So Thursday. So on Thursday, I was actually stopped out. So remember, I had moved my entry to break even on during the close. So on Thursday, during the AM session, I was stopped out on that uh, break even stop loss, which was on US 500. So, but that was not an issue for me because I was looking now to trade. I was still looking for long positions. I wanted still to look for long positions. And on the daily outlook of that day, let us look at what I posted on the channel. So I don't know why this is refusing to show. Yes, so on Thursday's daily outlook, so this is what I had on my daily outlook. So yesterday, referring to Wednesday, yesterday was a bullish day as expected. That's why I secured the long positions. Yesterday's price action resulted in a bullish daily change in state of delivery, which confirms my bias for the remainder of the week, especially today. So I am looking to hit most of my targets today. So at this point, the break even had not been hit, and I mentioned that on both assets we had this change in set of delivery. So you can see that the bullish candle that printed resulted in a daily change in state of delivery, which confirmed my bias for the remainder of the week, especially on Thursday. So you can see it's even more enhanced on Nasdaq US 100. And now on a daily chart, you can notice that we retested the NWOG, swept the Monday's low, as mentioned on the daily outlook, and then we displaced higher, formed a daily change in state of delivery, and now we have this. That's the candle which I'm looking to trade on that particular day. So let's get back to the chart. So maybe I should take you through this 4-hour outlook that I did. And on the 4-hour, I said that remember I was anticipating an inverted fair value gap on the assets after retracement lower on Tuesday. The inverted fair value gap formed yesterday, and now we have even more PDRX to support, in quotes, price rally to the upside. So on Nasdaq, we have a displacement gap, which I will be observing to see how price reacts to. So remember, if you are listening keenly, you have noticed that I mentioned that there were two ways that Wednesday's price action would have unfolded. We could have traded all the way higher, left that open as an inverted fair value gap, or I could get a retracement and I could trade off it. I got a slight retracement and I traded off it, and it also met the the it also meant what I wanted to see in that particular week. I wanted to see this form as a higher time frame inverted fair value gap, which I have mentioned earlier in this video. So as soon as I had that inverted fair value gap, I was now more confident that I was going to be trading. I was going to be very bullish on Thursday and probably on Friday, but mostly I wanted to hit my targets on Thursday. So the levels that I was observing on a higher time frame on Thursday were this 4-hour inverted fair value gap and this whole order block, because this is an order block, the last down close candle that reached into the internal range liquidity, and it actually swept sell side liquidity on US 500. So those were the levels that I was observing, this order block, this whole order block, 4-hour order block, and maybe this 4-hour inverted fair value gap. So let's go back to the chart. I will just go back to trading view. Okay. It's my first time trying to refer back to what I usually post on my channel, so bear with me. Might be The videos might be a bit longer if I do this, but I promise you it's content worth listening to. So let's just mark the for fair value gaps and start from there on both assets. Reset chart view. Then I will actually delete these daily dividers because now we have that price action locked in. So I have this change in state of delivery. That is a 4-hour change in state of delivery. I will mark it as a 4-hour change in state of delivery. Okay. Thought I wrote 4H. And now we have we had a beautiful inverted fair value gap. So this is a fair value gap bearish and then a bullish fair value gap, so it becomes an inverted fair value gap covering that area. So that becomes a balanced price range, and if you're expecting higher prices, price should respect those levels. And what will be our targets? The buy side liquidity right here on the upside, which now becomes an which was the all-time high, which became now my buy side liquidity. So that is what I was looking to target on both assets. So maybe I should mark the same on SP 500. Where's the chart? So you can notice how I move from day to day, and you can notice how I moved from the weekly outlook and then to my daily outlooks, and then I move into the 1 hour chart, to the 4-hour charts, to the 1 hour charts, because time is fractal and price is fractal, and what you see on the weekly chart is what should be reflected on these lower charts. So this is how I should mark it. This high, this low. Should have done the same on this. Yes. So we have covered all the highs and the lows. Yes. So that was my 4-hour inverted fair value gap. I'll just label it as that 4-hour IFVG, and I will do the same on this. For H IFVG. Right. So I wanted to see this 4-hour fair value gap being respected. In short, I wanted to see it anchor prices higher. So, and you can see that on both it was respected because we never got a close below it, because sometimes it will invalidate the consequent encroacher. But as long as on one asset, because that is the law of correlated assets, as long as on one asset it's respecting these levels. For example, you can see that on Nasdaq we never got a close below the consequent encroachment. Consequent encroachment is the 0.5 level of, or the equilibrium of that fair value gap, the inverted fair value gap. So you can see that on US 100 we respected that level very efficiently. So that is what is referred to as the market efficiency paradigm, which is not really important for this video. So I now want to get into the lower time frames so that I can break down how I took that trade. So remember, I had the longs from Wednesday, and then I wanted to add more positions after the 9:30 open. So maybe I should mark the Thursday midnight. Yes. So remember, I was holding some few positions on US 500 on from the previous day PM session or AM session. So I will just mark the Thursday midnight open right there. Mark it as my daily divider. Yes. So let's get into it. On US 500, the entry that I was holding, which was running risk free, that is the most important part. I had moved my stop loss to break even as soon as I closed the trade at 4:15. So when then the AM session open did this, we had that drop lower into the 4 inverted fair value gap, which is still a form of internal range liquidity. It stopped me out, and now I was ready to enter fresh longs from that moment onwards. So 9:30 open, let's mark that out. 9:30 open, 9:30 open. Go down to the 15-minute time frames. Thursday's price action was actually a bit confusing, but I chose to stick to my bias because I was not looking to trade the retracement move or anything else apart from the move higher. So first of all, there were two SMTs, and that is why you should always be careful of higher time frame directional bias, because you can be easily swayed from bias to bias if you do not have a cemented daily bias or higher time frame directional bias, and if you don't actually know what you're looking for in this market. Because I want to show you how we had indications of that prices were to go higher and lower on both assets. So looking into this price action, as I mentioned, I was expecting longs, so I had already marked out the London session low, which was that on US 100 500, and then it was here on that is what you had on US 100 and US 500. So there was a bearish SMT on yes on these two assets. So sorry about that, I was confirming something from my notes, and that was 1 hour. Okay, I found what I'm looking for. I had this SMT, this bullish SMT right here between the London session low and the Asia low. So This was a bullish SMT, and remember I was looking for higher prices. So as soon as I had been stopped out on my US 500 entry, I started to actively look for other long opportunities, because that is what I wanted to trade, and that is what I had outlined in my weekly outlook as well as my daily outlook. Nothing had nothing had presented itself in the price action to invalidate my bullish bias. So if this was my SMT, what I wanted to get is some form of change in state of delivery during the after post 9:30 a.m. session, open session. So I marked out my levels. So this SMT on US 100 becomes my sweep in liquidity. So, and on a 15-minute, that becomes my last down close candle. Okay, this one right here. So it becomes a change in state of delivery, which was reconfirmed and reconfirmed several times. It was reconfirmed at 5:30, confirmed again at 6, confirmed again at 7:15, confirmed again at 8:45. But remember, I do not take any trades before the 9:30 a.m. open. So when 9:30 open came, price traded lower on US 100, and on US 500 we swept these London highs. So that is where things now get a bit confusing if you are not an experienced trader, because now we have another SMT here, because this is a liquidity sweep, which becomes an SMT because we have a higher high being formed on the daily, and then we also have a lower high being formed between the London session high and the 9:30 a.m. high on Nasdaq. But remember, this did not shake me, because remember what I am looking for is longs on this day, and if my validation points have not been reached, I am not taking any longs. So what do? I sit on my hands until price gives me something I can trade off from. So 9:30 open did that. We traded lower. I saw this SMT, but then remember my weekly bias as well as my weekly bias and my daily bias dictate that I should be looking for longs. So anything that is bearish, I am not interested in. So I will just delete this, because that is not just showing it to you. So here we go. Price traded lower, retested the 4-hour fair value gap again. Not again, no, this was the first time. It retested the 4-hour inverted fair value gap, which I was expecting to hold price higher. So remember, I'm always mention consequent encroachment when it comes to fair value gaps and inverted fair value gaps. So I wanted to see that being respected, and it was respected. We just tapped into it. We never got a close on it on higher time frames, and even on as low as 15-minute, you can see that we did not get a close below the 4-hour fair value gap. I think even on 5-minute, we never got a close, you can see. So as soon as I saw price reacting to that way, I was sure that I was still going to get my long entry. So remember, this was a change in state, but it was not the kind of, it was pre-market. And remember, I do not trade pre-market. So I let the market do its thing, trade lower, and maybe reached into this inverted fair value gap, which is a form of internal range liquidity. So let me just delete that first change in state and then that sell side liquidity sweep, because we had more liquidity sweeps. So during the AM session, price spurred lower all through until we reached the 12 noon, which is still allowed. As long as I am sitting on my hands, I have no problem with waiting, because that is what most of trading is. You just draw your levels and do the waiting, expecting price to time to do the heavy lifting. That is what we call it. So as I was waiting for time to do the heavy lifting, I was just tape reading price as it kept spooling lower. So these were the AM session lows, this low and this low, and I marked that out as we headed into the PM session. So today I will show you a PM session tactic that you can use to trade. So that is the 130 open. So the PM session tactic that you can use to trade dictates that if you are looking to trade the reversal of the AM session move, you expect that after the 130 open, because remember from 12 to 130 open, it is the New York launch session, so there is no active trading. As much as you can see some form of active trading, it's not actually active. So after that, you can expect some form of AM session liquidity sweep during the New York launch session or after the launch session. So what did we see on this particular day? We had that sweep of the AM session lows. So let me just label this as AM session lows. AM lows. Let's make it bigger so it's visible. So as soon as we have that sweep on the AM session lows, we had the sweep on both assets. You can see that we also swept the same lows on US 500. So we have that AM session lows, and then the culprits or the candle culprits that are responsible for that is this set of down close candles on a 15-minute time frame. So that is what I will mark as my last down close candles. So remember, I was expecting the longs, so that is why I am actively looking for AM session lows being swept or any form of important lows being swept. And another confluence that was met was that this set of down close candles were responsible into tapping into the consequent encroachment of the 4-hour inverted fair value gap. So that becomes a very high probability setup because we have swept AM session lows, we have reached into the 4-hour inverted fair value gap, which is a very important internal range liquidity level. So as soon as we did that, in my opinion, price was ready now to return to bullish price action. So I marked that as my last down close candle. So, and as soon as I did that, I went to my 5 minute. No, I'm already in my 5 minute. So I think I did that on my 1 minute. Let's just go lower together so that we can observe. Yes. So as soon as the PM session opened, we had that liquidity sweep. Yes, I remember I had a 1 minute and 3 minute sweep confirmed, which became a 3 minute and 1 minute change in state of delivery. So yes, it's coming to me. So remember that was my last down close level. So I will just turn it into a change in state of delivery because as you can see, we already have that close above right here at 1424, that is 224 New York time. So as soon as I had that, I took my entry right here on 25030, and that is where I sent my signals to the channel. So as soon as we had that close on the next open of that candle, that is where I took the entry. Where was my stop loss? My stop loss was on this low, this current daily low. That is where I wanted to see That is where my stop loss was, and my targets were spread all over the previous session highs and the previous day high. But my major liquidity, which I wanted to see being swept, which we had marked already on the previous day, was this all-time high 25,190. So TP1 as usual was at 1:1, which was around 25,100. I did it at 25,100, which was on this swing. So I usually measure it with this measuring tool. So if I am willing to lose 71, then I want to take at least one entry from that to minimize my risk. So my first TP was right there, yes, at 25,103. My TP2 was on this relative equal highs, 25,139, yes, around there. And then TP3 was at 25,190, which was Tuesday's high, all-time high. And then I had another entry which I wanted to leave in the markets as a runner, because I was really expecting price to shoot to the upside on Thursday and maybe on Friday. So yes, so maybe I should share how I shared before we even get into how I held the position. Because okay, so let's just cover first TP1 and then I'll show you. Remember, TP1 was at that high. The bodies of these two candles, that is where my take profit one was. And as soon as we hit that, which we hit on Friday Asia session, which is it's a Thursday 18th. So it's the Asian session, which is the new day opening up. You can see it right here. So by 4:15 we had only come closer to that take profit one, but I did not take it because I had set the limits, so it was not being done manually. I left it open, and as soon as we hit it, I moved my stop loss from this low to this swing low. So you always need to protect what you have taken from the market. So I moved that stop loss to that level, and then you can see that on Thursday going into Friday's London session, price kept trading higher and higher, and as soon as we took TP2, take profit 2 was on this relative equal highs. Where are they? Okay. I think I did it at 25,166. So I took it here. Yes. 25,166. I will share what I posted on the channel right here in this video. I will attach that. No. So I was holding all of this. I adjusted TP2 to these relative equal highs. That is what I can remember. This relative equal highs. That is why I adjusted my take profit to, because I remember I adjusted that to this 24, I guess 143. Yes. And then what I did after that was that let's label these lines TP2, TP1, and then we have the ultimate buy side liquidity, the all-time high. That was my take profit 3. So as soon as we hit TP3 during still the Asian session. I woke up very early that day and I moved my stop loss to now to break even. So the trade was now running risk free, having taken take profit one at around 70 pips, TP2 at 100 pips, 111 pips, and then now I have two remaining entries running to take TP3, and then I wanted to aim a run at around 25 to 80. So now I had two entries remaining with 100 handles worth of profit in my pocket, running risk free. So let me just expand this back. After that, Friday, we came into the Friday AM session, and Friday AM session is something that I just want to go through real quick, because there has been a lot of controversy about people who saw that short coming and those who didn't. And I honestly believe that maybe some people saw it as a thank God it's Friday TGIF setup where we target for a 30 to 25% retracement, but nobody really expected it to short that much. So that is all I can say about that. So let's extend this to the right. You can see that we had this retracement during the Friday London session, which formed the London session low, which I assumed would have been the daily low, but it ended up not being that. So price traded higher, confirmed another change in state of delivery. I updated that in my channel. So we had that change in state, but I did not add in any positions because remember, I've already taken TP1, TP2, and I was now waiting for TP3 and TP4. I tried adding some few positions in the London session. I got stopped out, but they were very low size positions, so we'll not be looking at that. So during this, the 930 open is what actually reached my take profit, because remember my TP3 was at 25,191, which I'll just show you in the next few minutes, was at 25,191. So as soon as we did that, I moved my stop loss higher to the current daily low, because remember, I believe that the daily low has formed, and it has formed at a very ample time, which is the London kill zone, which runs from 2 to 5 a.m. in the morning, New York time, I mean. So that is where I moved my stop loss into profit for my run. Stop loss in SL in profit. So that is where I moved my stop loss, and it got stopped out during that short. But remember, I have taken TP1, TP2, TP3 at 25,190, and then now the runner, which I moved up to stop loss in profit, which was about let's just check, let's deal with numbers because I love numbers. 31 handles in profit. So I did not take a loss of any kind on Friday, to be honest. On that particular trade, it was a big win. And as I said, I booked over 160 handles. So let's just measure so that you can see. And it's 160, 62, 62, 61, 160, 162, depending on the broker. So, and remember, I had caught around 10 handles on Wednesday's trading. So that's around 170 handles. Do the math. Those are quite enough for a trader of any size, depending on how much you're trading. So that is how I traded the week. Two trades, two wins, one small win, and this one big win. And that is all for my video. Thank you for tuning in. I'll post the weekly outlook probably on Tuesday morning or on Monday evening. I will inform you on all my socials. So I had promised to show you the how I traded the how I took the take profits and how I shared the signals. So let me just do that as we end the video. So let's go to Telegram. So this is my channel. We currently have 6 subscribers. So kindly join. So the change in state, I was waiting. So yes, this was the signal. You can see it here. Buy US 100 now. That was at 9:32 p.m. So that is the PM session. Stop loss at 24,956. TP1 25,077. Blah blah blah. I did the correction. TP1 at 25,100 and then take profit 2 at 25,162. So we hit TP1. TP1 hit. Stop loss moved higher. So as I have just explained. You can see the 1 minute change in state was achieved. I took my entry, TP1 was hit, and then we go to, I have adjusted TP2 to this level where we have a set of relative equal highs, and as soon as that is hit, I am moving my stop loss to entry. The trade will be running risk-free. I have explained all of that in the video. So TP2 was hit. I moved my stop to entry. This was at 7:22 a.m. You can see it right here. So that is what we did, move our stop to entry. And then I took this re-entry. This is what I was talking about, which was stopped out. And as soon as I was stopped out, I was not interested in taking any other. I decided just to focus on the remaining entries. So I was just waiting for TP3 and TP4. TP4 was the runner. So yes, TP3 hit, moving stop loss to the 830 open swing low. Okay, so I actually didn't move my stop loss to the current daily low. I moved it to the 830 open swing low, so it was actually higher, which is actually better. And then I ended the week right there because yes, TP3 was hit. I moved stop loss higher, 160 handles caught, runner left with SL in profit. My week ends right there. So that is how I traded. I hope that was visible. So yes, that is how I traded the last week of, oh, not the, I'm sorry about that. That is how I traded the second week of October, and that is how I caught over 150 handles on Nasdaq and SP 500. Join my channel. The Telegram channel, the link is on my description. Kindly join. See you there on Monday for the new week.